Now, the session this week is going to be quite a special one because on Wednesday, I had a privilege of hosting a discussion between two financial experts, and we were talking all about the ringgit, exclusively about the decline of our local currency. Okay, so we go through Bank Negara Malaysia's intervention in the currency, whether it will strengthen the ringgit or not, plus the insights of these experts. So basically, the entire session today is just really a quick summary of what we covered on Wednesday. Okay, as usual, not financial or legal advice. And a quick shout out to all our current learners and gatherers, our patrons. Thank you all so much for your support. Allow me to start with Andrew, Wendy, Edward, Alex, CC, Is, Morpheus, Urshad, CG Balls, Kelvin, Kai, Thien, Tommy, Jinkang, Adrian, Eric, JS Wenyan, Dean, Duhan, and all our learners as well. So yeah, Wednesday, 28th of June, we conducted a session on what's going on with the ringgit. Okay, with Han Liu, founder director of Ringgit Plus, and Sani Hamid, economist certified financial planner. Now, both of these speakers have decades of experience in the financial markets. And if you miss any of this good stuff, yeah, the full recording is now available on Spotify. So later, after our discussion over here, I will show you guys where you can access this link. Okay. And I started the session pretty broadly, okay, with a few facts, okay. I pushed to the speakers. A year-to-date basis, I think most of you guys know already, the ringgit is not doing very well, okay, against the US dollar, negative 5.63%, against the pound sterling, almost negative 11%. And analysts right now, they're expecting the ringgit to probably hit RM5 against the US dollar in the next couple of months and RM6 against the pound sterling. So it's definitely not a very enticing sight to see. Okay, next up, comparisons to our Southeast Asian counterparts also. I think I presented this a few weeks back as well. Ringgit versus Sing dollar. Yeah, you guys surely know about this lah. Okay, Sing dollar the previous two consecutive weeks have been making all-time highs. Okay, if I'm not mistaken, 3.45 or even reaching as high as 3.47. Ringgit versus Thai baht, ringgit versus Philippine peso, ringgit versus Indonesian rupiah. You get the idea over here lah. The ringgit has been declining against not just only against the Western currencies, but against our Southeast Asian counterparts as well. So clearly, there is something going on with our local note, okay? Which is why I decided to put it to the speakers and said that the devaluation of the ringgit undoubtedly caused considerable concern among Malaysians, people like you and me, okay? Let's begin the session by examining its effects. How does the ringgit's decline affect citizens apart from seeing import prices go up? Yeah, because the first impression when you look at the ringgit falling, apart from the confidence dropping, is that generally we will see import prices go up. And Mr. Sani pointed out that currencies are mainly driven by supply and demand. Okay. If the demand for a particular currency is high while its supply remains constricted, then the currency will strengthen. Okay. Vice versa, in the case of when the currency will weaken. Okay. The impact that comes from a fluctuating currency depends highly on what you consume. Okay, so if you consume a lot of foreign goods, yeah, if you buy stuff from the US a lot, from the UK a lot, yeah, then you will certainly see prices go up. Then your inflation will be kind of higher compared to the rest of the people who are spending locally. On the other hand, it's not just bad news over here because people look at a weakening ringgit and think that it's all just bad news. If you're a net exporter over here, okay, which Malaysia is a lot of people are exporters, okay, your goods become more competitive because usually when you export goods, they are priced in international currencies like the US dollar, pound sterling, etc., etc. Yeah, since the ringgit has been weakening against these currencies, technically your goods become quote unquote cheaper. Okay, there is also a sense of pride because the ringgit is a reflection of Malaysia's economy to a certain extent. To say that the current ringgit is a perfect reflection of Malaysia's economy is not really a fair statement. But the long-term trend, yeah, that kind of tells you what Malaysia is doing right now. Okay, in 20, 30 years, how has our currency fared against all the major currencies out there? And it's a good telltale sign of our nation's economy. Okay, a declining ringgit could draw confidence away from the local note. Yeah, this is pretty self-explanatory. You guys are already not feeling very confident towards the Malaysian ringgit, right? And just a few winners and losers over here provided by Economics Hub. Okay, devaluation, depreciation of a currency. Now, in this case, the ringgit. Yeah, they are winners, are exporters, domestic tourist industry, workers gaining jobs in the export industry. So it's not just all bad news. Like Malaysia could see a bit of demand coming in these areas. Okay, losers, consumers who buy imports, residents who go for holiday abroad. Yeah, so if you have a trip planned to the UK or if you're planning to study in the US, this may not be the best time because it's quite expensive due to the weakening of the ringgit. Those on fixed income wages who see inflation rise faster, etc., etc. Yeah. So next question, which is one of the biggest questions. What are the reasons for this decline? Why is the ringgit experiencing such a significant drop, not only against the US dollar, but also against other major currencies, as you guys have seen just now, okay? And the speakers, they said that you can't just look at a currency pair and deduce that the ringgit is weak. Yeah, this is what a lot of people think. They look at USD MYR pair and they say that, oh, ringgit melemah. Malaysia is doing very bad. Okay, there's some weakness attached to the local note, yes, but there is also dollar strength. Okay, remember in our past few sessions, we also talked about how the US dollar has rallied, yeah, against not just the Malaysian ringgit, but all the other currencies out there. And the biggest factor towards the US dollar rally that we've been seeing is because of the Federal Reserve's aggressive interest rate hikes. Okay, so I think since March or May last year, the Federal Reserve hiked interest rates by over 500 basis points already. Okay, so that really drove demand away from a lot of other major currencies and towards the US dollar. So that's the first factor. Okay, we are seeing a bit of dollar strength over here. There is also net foreign selling in the local equity market. Okay, funds are switching from South Asia to North Asia. So this is not just Malaysia specific. This is regional specific. Yeah? Investors right now, they are switching funds from South Asia to North Asia. MIDF's report, I think I've also showed you guys, if you join our session for a few times, you know. Yeah, this report showed that foreigners have been net sellers in the Malaysian equity market for 8 consecutive weeks. Okay, and that kind of translated to some sell pressure towards the ringgit as well. So this is the next reason. Now, the third reason, which Mr. Sani believes, lies within the ringgit itself and is mostly due to political uncertainty. And if you look at Malaysia right now, right, yeah, it's kind of true, because we've seen 4 prime ministers in the past 5 years, and the current government is a coalition, so investors, they're kind of unsure how stable our country is. I mean, if you ask any Malaysian out there, yeah, we ourselves are not even very sure how stable our country is. Okay, so it boils down to the case of why should I even hold the ringgit? Right? Okay, ask anyone on the street, uh, or even people in this session, right? If I ask you today, if you were to receive your salary in Malaysian ringgit, Sing dollar, or US dollar, which one will you choose? Undoubtedly, I think most of you will choose either Sing dollar or the US dollar, right? Because there is really no hard motive to even hold the ringgit right now, which is the issue of why we are seeing the ringgit weakening. Okay, apart from all these factors. So switch from south to north over here. This is just part of MIDF's report. Okay, you can see net foreign fund flows into North Asia, India. Now, the reason why we are seeing this inflow into these countries is because of the AI narrative. Yeah, these countries have been more investing more money into AI advancements, ChatGPT, etc., etc. Okay, meanwhile, all the other Southeast Asian countries, Malaysia, Philippines, Thailand, Vietnam, except for Indonesia, we are seeing net outflows. Okay, so that kind of explains the part of the selling pressure on the Malaysian ringgit. Yeah, so stop panicking. Malaysia is far from a crisis. Yeah, a lot of people see Malaysian ringgit decline 5-6% against the US dollar, and then 10-11% against the pound sterling, and say that this is the end of the Malaysian ringgit. This Malaysia will see hyperinflation, blah blah blah. But if you compare it to other countries, yeah, like Turkey, the Turkish lira versus the US dollar, ever since its high in 2008, right, it has lost over 95% of its value. Okay, so meaning, let's say one Turkish lira over there, 10, 11 years ago, it has lost now is equivalent to about 5 cents. Okay, so other countries, if our currency is depreciating at this rate, right, then we should be worried. But if it's a 5-6%, 10-11% against the pound sterling, and generally we are seeing major currencies depreciating against the US dollar as well, then we shouldn't be too worried. Okay, because Malaysia is far from a crisis. Right? So next question. many people attributing the ringgit's weakness to the lack of action from Bank Negara Malaysia. Now, this is after I posted a few threads about the Malaysian ringgit, and then people start tagging Bank Negara Malaysia. I'm not sure if you're one of them, lah, okay? As if Bank Negara Malaysia can actually fix the issue on the ringgit. So, I'm not trying to say that they can or they can't, but it's a very common misunderstanding, lah, okay? So, I decided to ask the speakers, what measure could the central bank undertake in this situation? As a central bank, Bank Negara Malaysia's purpose is to ensure stability of the financial markets and the ringgit. And never did they say in their statement that they will strengthen or weaken the ringgit. Yeah, their purpose is to ensure stability. The central bank can only affect the ringgit's strength or weakness in the short term. Yeah, and they do this via a few methods. Yeah, the first method is FX operations, using the reserve that Bank Negara Malaysia has in order to maintain the ringgit stability. So you won't see like 10, 20, 30% swings in the ringgit compared to other currencies per day. And that's because Bank Negara Malaysia is using uh, the ringgit or other currencies to defend the ringgit's volatility over here. Okay, and they do it by selling foreign currencies or buying foreign currencies, etc., etc. Okay, setting the local interest rate. I think this one you guys are quite familiar. The higher the OPR, the higher the interest that holders will receive. Hence, demand will flow towards the ringgit, strengthening the local currency. Okay, so generally, right, if you look across global central banks, okay, the higher the interest rate set by that particular central bank, the more demand for that currency. Yeah, this is why the US dollar and the pound sterling is extremely strong because the interest rates currently is like 5% or even 5.25%. Yeah, compared to Malaysia, our OPR is only at 3%. Okay. In regards to the recent weakness, Bank Negara Malaysia made it clear that their purpose is to reduce the ringgit's volatility. There's actually little they can do to change the direction of the currency, you know. Okay, their purpose is just to make sure that the ringgit doesn't see very big swings on a day-to-day basis. The long-term strength of our local note, this will need to come from government fiscal policies and economic development. Yeah, so there's a big misunderstanding from commoners, people who don't really know Bank Negara's true function over here. Even I was surprised. So next question, raising the OPR by a fair margin in order to play catch up with other central banks and strengthen the ringgit is definitely something to consider. A lot of people are proposing this solution, right? People are asking, Bank Negara Malaysia, you need to raise the OPR 2, 3, 4 more times in order to strengthen the Malaysian ringgit. But these OPR hikes will further burden citizens, right? As what we are currently witnessing. So the speaker said that the purpose of the overnight policy rate it's not about this, it's not to strengthen the currency at all. Contrary to popular belief, it is to ensure price stability, i.e., inflation. Yeah, this is also another big misunderstanding from citizens. The hikes are meant to tame price pressures, not to strengthen the ringgit. Okay? As Malaysia's inflation has moderated steadily to 2.8% in May, now this is the latest figure, there's really no reason for Bank Negara Malaysia to hike rates aggressively as it will only add more burden to citizens. Okay, so 2020, 2021, Malaysia did kind of lost control against inflation. Yeah, we saw inflation going as high as, if I'm not mistaken, I think 4 or 4.5%, right? And that's why Bank Negara Malaysia decided to step in, raise the OPR, start to put a lid on inflation. Yeah, which is why we are seeing inflation cooling back down to the central bank, close to the central bank's target goal of 2%. Okay, and this trend is not only observed in Malaysia, you know, globally, all the central banks out there, they lost control, yeah, against inflation also. And if you look at Malaysia, 2021, 2022, our inflation was somewhat controlled thanks to the government subsidies. Without government subsidies, inflation in Malaysia would easily jump to 9, 10, or even 11%. So uh, try to look at the the better perspective over here, guys. Okay, remember every 25 basis point hike represents a 35 ringgit per month increase in your floating loan principal of 250,000 ringgit. Yeah, so if your principal is 500,000 and it's 70 ringgit per month, and it really adds up. Okay, and new loans will get affected as well. So today, if you were to take a fixed car loan, the interest rate will be likely much higher compared to taking the loan a year ago. The next question, the recent intervention of BNM in the forex market. Yeah, they announced its intention to intervene in the currency market, halt the depreciation of the ringgit, I decided to ask the speakers, how effective is this approach? Is it possible for the ringgit to strengthen and reach the 4.44 range now? Well, Bank Negara Malaysia turn the rackets on and make the ringgit rally or not? Yeah, I think you got a glimpse of what I'm about to say. Yeah, the answer is no. Okay, Bank Negara Malaysia has been doing what they are always doing. It's just that now they decided to announce it, probably stop a bit of panic among citizens. And on a day-to-day basis, the central bank uses their reserve to ensure that the ringgit's fluctuation remains manageable. Yeah, like what I said just now, so that we don't see 10, 20, or even 30% swings on a daily basis. It is impossible for Bank Negara Malaysia to change the long-term trajectory of the ringgit. They simply do not have enough power to do so. Okay, and this will need to come from, again, fiscal policies and the country's growth. Plus, everybody really needs to move away from the fact that a weaker ringgit is detrimental. Yeah, citizens right now they're looking at, oh, ringgit is weak, country is doing bad, Anwar's fault, blah, 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 blah. If it's depreciating at the rate of the Turkish lira or the Lebanese pound, like what I showed you guys just now, that chart, right, then we should be worried. A moderately weaker ringgit, in fact, could enhance our export competitiveness, which is ultimately good for the Malaysian economy. Okay, so like what I covered just now, don't panic. Okay, these are the ringgit is there for a particular reason. Okay, so next question. Since I covered on Bank Negara Malaysia not being able to do much, they are just there to cushion the ringgit's volatility. What then should the government do in order to retain interest in the ringgit? Because we are talking about long-term stuff over here. And Han said that politicians should stop focusing on the ringgit as a goal. Yeah, start focusing on more important things. Don't campaign based on the strength on the ringgit because that is a no-win situation. Okay, focus on things like GDP growth because the stronger Malaysia's economy is, the ringgit will take care of itself. As long as you settle the fiscal policies, the country's GDP growth, the ringgit will follow. Okay, because we need to be seen as a country that has a strong, vibrant economy, growing at a faster pace compared to all the other emerging markets out there. And sooner or later, investors will come in and invest more in the Malaysian market. We also need to ensure that our fiscal position is well controlled. This means that we do not borrow intensely to fund expenses of our country. Yeah, we gotta manage our debt properly. Okay. And finally, we need to place less restrictions for foreigners to invest in our market. In order for the ringgit to strengthen in a long-term basis, we need to make sure that it is highly tradable, highly liquid, and highly accessible. Yeah, don't go put all these unnecessary restrictions, and at the end of the day, foreigners they leave our country because of all of this uh, uh, conditions. Okay, so those are the few steps that will improve the long-term trajectory of the ringgit. And the final question, now that we've talked about the government, let's bring it to a more personal perspective. Are there any steps that Malaysians can take to preserve their purchasing power? Yeah, so we talked about the government already. Now let's talk about citizens. So as a Malaysian, we will naturally have a skew towards holding ringgit assets. Yeah, this is entirely normal because we are spending our money in Malaysia, right? This is exactly why everyone needs to be diversified. Don't keep all your eggs in one basket. And this just not only includes having multiple stocks and bonds, okay, but currencies as well. Okay, so whether you're holding the Sing dollar, US dollar, the sterling pound, etc., etc., you need to have some assets that are not necessarily denominated in the Malaysian ringgit. Okay, and ultimately this percentage would depend on your risk profile. Every single person's risk profile is different. So therefore, for us to slap a percentage for everyone and call it a day is really unfair. Okay, make sure you don't keep your money in a current account earning zero interest. Now, this is in the case of the ringgit. Okay, for me personally, I don't really hold a lot of cash in my bank account, in my current account. I just hold enough for probably an emergency. The rest of it is earning interest. Okay, just bear in mind your money is depreciating with inflation at 2 to 4% yearly. I think you guys know this already. How to preserve your purchasing power? Yeah, invest into low risk assets like money market funds. Yeah, these include Touch and Go, Versa. All these are low risk money market funds. Okay, and they are extremely accessible as well. Within the next 5-10 minutes, you can deposit your funds. Fixed deposits, I think we also do fixed deposit updates once a month. You guys can check out what are the best rates. Now it goes as high as 4.5%. So it's actually pretty juicy also ensure that you have enough for an emergency. And the key point over here is that your ringgit should be earning higher than the overnight policy rate. Okay, so overnight policy rate is currently at 3%. If you are not earning higher than 3% per year, then you got to look at your portfolio again and see whether you need to change your investments or not, or put it into low risk money market funds like all these options over here. So my personal options that I've been using for I think close to a year already, or perhaps more than a year. First of it is Versa. It remains my top option. Okay, it gives you 4% per year. Gold Plus gives you the flexibility of depositing, withdrawing anytime instantly. Okay, using Do It Now, 3.5%. And the next one is Go Invest. Okay, so these two features are within the Touch and Go app. This one requires obviously you to download Versa. Okay, so yeah, and that kind of brings me to the end of my. Oh, actually, I got one more slide. What about crypto, right? So I decided to ask the speakers about their perspectives on crypto as well, and they believe that owning a bit actually reduces the overall volatility of your portfolio while potentially boosting growth. Yeah, why? Because crypto is known to be inversely correlated to traditional assets. Yeah, previously it used to be very correlated to the tech stocks in the US, but more recently it's traveling in its own path, which makes it a perfect investment opportunity. Right? Yeah, you take a look at the banking crisis in March, right? A lot of other assets, traditional assets, they've been falling like there's no tomorrow. But meanwhile, Bitcoin has rallied easily by 30-40%. Okay. It is also not affected or controlled by politicians with bad policies. Yeah, you don't have like a stupid politician with some random policy, yeah, making the Turkish lira depreciate by 95% in the span of like what, 10, 12 years, right? So this is where crypto comes in at a very crucial point. Okay. And the percentage mentioned by them, even when they are very optimistic regarding this asset class, is 1 to 2% if you're a conservative investor, or high single digits, 8 to 9% if you're an aggressive investor. Okay, but right now what we are seeing is both extremes. You know, people who are hard on crypto, they go 80, 90, or even 100% into crypto. Or people who dislike crypto, they completely don't invest in crypto at all. But what we actually need, or they suggest, is that minuscule 1 to 2% if you're conservative, or high single digits if you're an aggressive investor. Okay. And ultimately, this percentage again is just based on their perspective, and everybody's financial status is different. You might want to adjust these percentages accordingly to your own risk profile. Okay. Thank you guys so much for joining tonight's quick summary. Stay safe out there. Bye. Good night.